Welcome to The Frontier, a podcast where you meet the exceptional members of Praxis, a city-building company and community. We will discuss the issues facing our current civilization, the ideas and frameworks our members are creating to solve those issues, and crystallize them into a vision for the future. My name is Eric Wahlberg. I'm the head of community for Praxis, and I will be introducing you to the members of our community and the vision that they hold for the Eternal City. Let's begin. Welcome to the newest installment of The Frontier. My name is Eric Wahlberg. I'm the head of community. And The Frontier is a podcast where I interview the exceptional members of the Praxis community about the ideas and projects that animate them. Today, I'm excited to be joined by Miguel Morel, the founder and CEO of Arkham Intelligence. Miguel, welcome to the podcast.
Thank you for having me, Eric.
So Miguel, I like to ask everyone the same first question where they give people kind of a background of their origin story and kind of how that led them from their beginnings to where they are today.
So I grew up in Philadelphia, and while I was in high school, I met a mentor of mine who ended up basically concluding the opportunity cost of you going to college is actually a lot higher than you think it is. You should drop out and just become an entrepreneur. And so I took his advice and I moved to California, and he introduced me to, a number of different people who I later ended up building Reserve protocol with. And so I initially got into that business because we're looking to find, okay, what are the best markets to operate in? What are the biggest problems in the world? And, how could crypto potentially solve these things? And so it was very clear to us that, we wanted to build something for people who had very serious problems. Countries like Venezuela and Zimbabwe and Argentina were facing many issues with inflation and with monetary policy. It was very difficult for people to live just because their money didn't work. And crypto seemed like a really great solution to that. And so I worked on Reserve for several years, working on essentially, developing our protocol and our technology and going and doing business development in a lot of these different countries in order to, build something very valuable. And since then, Reserve has on occasion been the number one app in Venezuela and has gotten significant traction in a lot of these different markets. But one of the things that I realized was there wasn't enough data infrastructure in the crypto space to really know your customer and, really understand who are all of the different people in crypto. What are they doing with their money, from hedge funds to traders to people who are making micropayments in a lot of these different economies. And it seemed very clear to me that you could build a piece of technology that could take in all of this information, all of this publicly available blockchain data, publicly available data from other sources, gathering intelligence from other kind of, private sources, getting access to metadata and so on, where you could piece together a full story of who all of the people who are trading crypto are and what they're using their money for. And so that's what I decided to build with Arkham, a way for people to have a God's eye view of the entire market and of all of these different people who are participating in the crypto economy, who they are and what it is that they're doing with their money.
Okay, makes total sense. I mean, you certainly wouldn't get any argument from any member of the team here. So you come to the conclusion that crypto is kind of the place to be. It's this frontier, this financial frontier. How do you go from that decision to founding Arkham?
So while I was in the Bay Area, I was introduced to somebody who later ended up becoming my co-founder on my first crypto company, Reserve Protocol. So Nevin was thinking a lot about what were the most important problems in the crypto space and basically found that volatility was one of the bigger issues in the space, that if you wanted to kind of really grow the crypto ecosystem, finding a way for people to get access to stable money was very important. And so I ultimately ended up working on Reserve, which is a decentralized stablecoin, which is focused on hyperinflationary economies such as Venezuela, Argentina. It's expanded into Colombia and Panama and Peru, essentially providing people a way in which they can get access to decentralized digital dollars outside of kind of traditional fiat gateways. So these are places with really high inflation, strict capital controls. The government is really bad at managing fiscal policy and monetary policy generally. And so a stablecoin provides a solution for people to be able to save money in a currency that is inflationary, be able to receive remittances for very cheap, and be able to, make purchases and accept money for goods that isn't just going to erode away. And so I basically started on this Reserve project and worked on it for a couple of years and ultimately landed on Arkham because I realized that there wasn't enough kind of intelligence and data infrastructure in the crypto space to gather intelligence on crypto users and what their activity looks like.
So you identify that problem. Give people a little bit more of a kind of high-level introduction to Arkham and what it offers. What's your kind of deep why around it? And then what you're excited about like every day when you go to work?
So Arkham Intelligence is a crypto analytics company fundamentally. And so what we do is we analyze public blockchain data and other sources of public information, as well as gather intelligence from private sources to de-anonymize cryptocurrency addresses. So our high level vision is to take a product like Etherscan, which shows you all of the activity that goes on the Ethereum blockchain. It shows you all of the different addresses, how they're sending money between one another, and make it really kind of human friendly. And so this information gives you a lot of data, but it doesn't actually tell you much of a story if you don't actually know what you're looking for. We actually want to make it much easier to read and to analyze. So who do these addresses belong to? Why exactly are they sending this money around? Are they sending money to themselves? Are they sending money to a different person? Is it cross borders? All of these sorts of pieces of metadata are very important to be able to tell the story about how this money is moving around. And so in the crypto space, there's actually two narratives that are running in parallel. One narrative is that crypto and blockchains in general are incredibly transparent. Everything is publicly available and easy to see, and that's the whole point of using a public ledger. And the other narrative that's running is basically that crypto is really shady. People don't actually know what's going on, and the whole point is that it's anonymous. And so there's kind of this question of why both of those things exist in tandem, and then also what we can do about it. And so we actually want to unify those two ideas because they're both true. It is both true simultaneously that all of the information exists on chain and on blockchains for how people are moving around their money. But at the same time, a lot of the addresses are pseudonymous, right? So unless somebody reveals to you what their address is, you don't necessarily know who's doing what in the space. And so the kind of high level goal for Arkham is to take all of this kind of transparent information and then link it to other pieces of metadata around who all of the different entities who are interacting in the crypto space are and how exactly they're moving around their money.
So to that latter kind of narrative that you outlined, financially crypto's booming, right? Fluctuating between like a $1 and $2 trillion market capitalization, and obviously 2020 saw it really take off. But there's been increased pressure, particularly in the United States, on the regulatory front, mostly coming from the SEC, but also from other entities. Just in the last couple of days, the FBI announced the creation of the Virtual Asset Exploitation Unit. Where do you think all that's heading, and what role does Arkham have to play in it?
I think crypto is going to head in the same direction as the traditional financial market did, which is that it originally starts in kind of like this Wild West environment where people are producing all kinds of assets that are easily investable. Many retail investors can kind of fall into a trap of trying to get rich quick. There's a ton of scams. People aren't able to differentiate what's good versus, what's not good. And so, the government steps in and says, okay, here's a set of boundaries that you need to follow for creating new assets or kind of specific case, new securities. And I think the same thing is going to happen for crypto. They're going to set a boundary for what kinds of things you can and cannot produce in the crypto space and what kinds of people can and cannot invest in those assets in order to offer more kind of general investor protections. And so I think that the world of crypto is making a transition from a complete, more anonymous Wild West where anybody can do whatever they want without anybody else being able to see exactly what they're doing, to the same level of scrutiny that we have in traditional financial rails and financial markets, which is that there is mass government oversight. Your bank and other government institutions can figure out who you're sending money to and for what purposes. And there's sort of all this regulation around what sort of things can get listed, what sort of things can't, what you can invest in as a non-accredited investor, and so on. And so I think crypto is just going to have very similar protections for the average person and is going to move more in a direction where, just like with your stocks, the government can see every transaction that you've made, every trade that you've made, and is making sure that everything that you're doing and investing in is compliant, and the things that are actually available for sale to the average person also has gone through, a relatively scrutinous process to make sure that it's actually safe to invest in and isn't just going to cause massive losses. And so I think that the role that Arkham is looking to play is one where both large institutions such as, hedge funds, other sorts of trading firms and government entities, along with retail investors, can get access to intelligence and information to be able to do better due diligence on the projects that they're trading on, the things that they're investing in, and the people who they're trading against and what their activity looks like.
It makes a lot of sense. I mean, you'll love this, but I was recently reading the transcript of the antitrust suit against John D. Rockefeller. And in his closing statement, the last statement he made to that court, he talked about how when he started Standard Oil, the oil market was a wild, wild west. I mean, people were literally killing each other over oil fields, whatever. It was not a very stable market to actually produce an output that was like pro-social. And so he explained how he went and created order in that industry such that like there was a kerosene lamp in every person in America's home, and he lit up America, right? And it sounds to me that like a lot of people are like always talking about the percentages of Americans or the percentage of X person holding crypto. But the way that you actually get there is really by creating order in a market as opposed to just allowing like this chaos to ensue, which you could maybe say was like somewhat analogously good for innovation, but it's really good for innovation insofar as it's good for producing better Ponzi schemes and more kind of high volatility speculation. I am curious if I can ask, what does that look like? What does it actually look like when you have, the analogous thing to a kerosene lamp, and what happens when every American has some exposure to crypto and institutions begin to enter the market? It seems to me that since crypto has been pretty much only a retail phenomenon because of this kind of wild, wild west activity, that it can only be net positive in the medium term to long term for people who are exposed to crypto assets today. So I feel like there must be some misunderstanding between people's understanding of what's actually beneficial to their net worth, shall we say, in the medium to long term by creating more structure, more transparency, and better data and analytics around the industry.
Yeah, I agree with that. I think you have to strike a balance between regulatory scrutiny and allowing enough free market economics to actually allow for innovation. And I think that in general, America has been really good at this. I think in places like Europe, for example, it's much more difficult for people to go out and start businesses, especially in the financial sector, because the regulatory scrutiny has gone too far. And, in some ways they've done worse in these respects. But, in some cases, because of it, they've done a little bit better. So, for example, like now you go to a place like the UK and they have Revolut and Monzo and all these kinds of, neobanks that don't really exist here in the US, but are better to work with than, say, one of the larger banks like, say, Chase. And so I think that in general, you have to try to strike a balance similar to the one the US has had, which is you generally allow innovation and you allow people to go out and create businesses and create enterprises. And in many ways, it actually serves in a kind of trial and error function. The way that the SEC works is there's many of these kinds of different assets that have come to exist within crypto. They then go and kind of review whether or not those things fall under their jurisdiction as securities and if they're being offered to Americans. And generally the regulation comes not just out of nowhere, but rather as a result of people getting burned and then that getting reported, right? And so it causes a relatively small number of people to end up getting burned in some kind of trading or investing or some sort of issue that they run into that gets reported higher up, and then regulation comes down the drain that basically says, okay, the thing that causes people to get burned should no longer exist. You're no longer allowed to do this. And so I think that, crypto is going to continue in kind of like a general direction where more innovation will come down the pipeline, new products, new kinds of assets, new kinds of things that may or may not be securities. And over time, we will learn how to better regulate that and make it a lot easier and less risky for people to get involved in the market. In terms of whether or not it causes growth, I think it does pretty straightforwardly. And the reason is because a lot of the really big capital is actually tied up by institutions, right? Private equity firms, different sorts of other funds, such as like pension funds, for example, they have a bunch of money that's really tied up. And it's tied up not just from an investing perspective, but actually from a compliance perspective. They're not allowed to invest in a variety of different assets that may be too risky or pose some kind of, say like money laundering risk, for example. And so they're actually prohibited by either the LPs in the fund or just general regulation from investing in tons of crypto assets. And so for the average holder and for people who have gotten in way earlier on, it's actually net positive for them if there is some amount of clarity and some amount of closer regulation to what we see in like the stock market, for example, that makes it a lot easier for funds to justify to their LPs that they're going to invest in these new riskier crypto assets in order to generate more returns. And so I think that my vision, what I see happening to crypto over time is it starts to look less like oil during the time of Rockefeller and more like the traditional financial market today. And the more it kind of mimics what the equity and traditional derivatives market looks like, the easier it'll be for big money to come in and invest. And that's happening to some extent now. There's a bunch of quantitative trading firms and others who have started easing their way into the crypto world, like Jump Trading, Jane Street, SIG, for example. But I think that a lot of the other kind of larger, more dinosaur-esque players who have a bunch of money in their funds will be able to allocate a lot more efficiently into the crypto market once the regulatory environment is made more clear.
Last question on this, and then we move to another topic. But what also I think is really pro-social about this, and it's something that I've constantly been scratching my head about, which is that obviously in the collective West, we've hit kind of public debt and deficits that are essentially untenable. I don't think that inflation is a bug. I think it's a feature. It seems to me very obvious that the only option really is to kind of inflate our way out of the debt to some level, because I forget what the number is, but 0.25% interest rate hike is the size of the US Navy. That's the operating budget of the US Navy, which underwrites global trade. And in that environment, I really look at digital assets and I say, this is a really lucky invention at a very precarious time. And the fact that there's such an adversarial relationship between the federal government and regulatory bodies and these assets, it's kind of a shame at some level, because if we can kind of create the guardrails and the safety for retail investors and institutional money, which includes, of course, pension funds, and ensuring that the value of your pension fund is not, eroded, your pension's not eroded over time. But if you can create these guardrails, the actual outcome is the protection of wealth over this period of inflation.
Yeah, I think in general, it's very clear to me that the monetary policy is not working. It's working very poorly in places with hyperinflation, but it's also working poorly here in the United States. And I think that overall, it's very important to get out of it, to say the least. And so the environment that we're in now is one where it is necessary for any person with money to participate in the financial market. You have to buy stocks. You have to do something with your money, because I kind of follow a more Ray Dalio idea here of, the sort of cash is trash thesis. And the fact is that if you're sitting in cash, you're choosing to opt out of our financial market, you're choosing to opt out of this hyper securitized environment where everybody's moonlighting as a hedge fund manager, then you are choosing poverty. And you're choosing to erode your wealth away, because the way that the financial system is set up now, such that more dollars are being printed, all of the other sorts of assets are increasing in price. And when I talk about inflation, I don't actually just mean traditional consumer price index sort of inflation. I think about inflation where you're actually buying things at scale. If you have $10 million, there's not really too much of a point in looking at what the inflation of, the average milk gallon or piece of corn is. The thing that actually matters is whatever assets you're purchasing with that amount of capital. And the things that you're purchasing there are equities. You're purchasing real estate. You're purchasing things that are way more expensive today than they were even 3 years ago. So all of these markets have been booming, including cryptocurrency. And the fact is that with the same amount of dollars that you had several years ago, today, you can buy a lot less of Apple stock or Amazon or New York real estate. It doesn't matter. It's all kind of just been inflated way over time. And so it's a little bit of an illusion for us to think about inflation in terms of these goods that you would never actually buy $5 million of, but rather we need to be looking at the assets that people are actually deploying into, and those have completely skyrocketed. And I think that that's a lot closer to what real inflation looks like. And so crypto is a new way and solution where people can opt out of this kind of traditional fiat system and opt into money that, from a programmable perspective, is not inflatable. So with Bitcoin, you have this assurance that you will have access to your coins as long as you custody them safely. They're not going to be seized from you. And there will always be a set amount. And you know exactly what the schedule is in which it gets released. And over time, the supply and demand economics of Bitcoin are such that the demand has continued to go up as the supply has gotten smaller. And so I think that that's going to continue, one, because less Bitcoins exist in the future than have already been mined. But number two, because as these institutions come in and as these wealthier players with lots of money come into the crypto space, they actually suck up all of the liquidity. So there's kind of this effect within crypto where the need to sell your coins comes from a need for liquidity. But if you look at companies like MicroStrategy or other sorts of, say massive pension funds or, billionaires who come in and they buy Bitcoins, those Bitcoins essentially go into a black hole, never to be seen on an exchange again. So for all intents and purposes, they go completely dormant, and the actual real supply of Bitcoin is a lot smaller. So this combination of people sucking up all of the liquidity for Bitcoin, those coins never hitting exchanges again, people with lots of coins and very large positions passing away and losing their keys and so on, that also causes a bunch of supply constraints. And over time, the coins transition from those who need liquidity to those who don't, and who are willing to basically, give those who need liquidity cash in exchange for those coins, and those coins are never going to come back. And so as long as the demand continues to increase and the supply decreases in the way it has been, then I think it's very natural for the prices to continue to go up, and that being a natural hedge against inflation.
Okay, I lied. I want to ask you one more question, but it's of a different tune. So I talked about this with a number of people on the podcast before. Something very interesting about Bitcoin versus all of the other assets is that you have this almost metaphysical progenitor in Satoshi Nakamoto. And what's unique about Satoshi Nakamoto, right, is of course that we don't know who he is. Obviously, people have claimed and then had to basically retract. I forget the gentleman who recently came up to that. But it creates a very different dynamic, in my opinion, around Bitcoin than maybe Ethereum, simply because we all know who Vitalik Buterin is. And what's also interesting is, people talk about Bitcoin maxis and the almost religious fervor that they have. And to me, that stems almost unilaterally from the fact that the founder of this protocol is in a world where history is restarting. What you think is like the interesting dynamic of that?
There's no way to run the experiment twice, but arguably I would say Bitcoin would not be as successful as it is today if Satoshi Nakamoto was not pseudonymous. I think that is part of the beauty and the magic behind Bitcoin as a product. And I think that there's something very, very special about a project being able to get to a multi-trillion-dollar market cap with no company behind it and no very public founder. I think that this is the first time in history that something like this has happened with regards to technology, where generally a lot of these other sorts of projects, they have some kind of idol that you can look towards who's kind of carrying the vision out. And, the project in a way hinges on that person. I think the most famous example of this today is Elon Musk, where, I think everybody would basically say that the future of Tesla and of SpaceX and of all his projects, hinges on what he does or what he writes on Twitter, what he's thinking on any given day. But the beauty about Bitcoin is that as a decentralized, trustless product, it even has that decentralization in how it was formed and how it's managed. And I think that that's a really important piece of crypto history, and ultimately will end up being a really important piece of history overall.
Awesome. So we kind of talked about the circulatory system of civilization in the way of financial markets and money. Let's talk about the body. And what I mean by that is, of course, cities. Of course, Praxis's main goal is the creation of a new city. You've lived in a number of cities around the world. There's no shortage of publicly known kind of critiques of cities, but I'd like to get a better sense of your worldview on what's gone wrong in cities and perhaps how that is what's inspiring to you about the project.
I think the number one issue that I face today around cities and where to live and where to build my projects is that there's no nexus. There's no heart. I yearn for times similar to, say the early 2000s, or even around that sort of 2012, 2016 period, where it was very obvious to anybody who wanted to be a tech entrepreneur that they needed to move to the Bay Area and they needed to be in San Francisco. And that's where all of the smart people were. That's where all of the people who were hardworking lived. And that's where you had to build a big project. If you wanted to do anything very large, you had to be in the Bay. That's where the capital was. And that's where all the talent was. And slowly the Bay Area, even before COVID, was clearly in decline and getting worse. And there were, all of these major issues with the city that made it, harder to do entrepreneurship there. But then the pandemic really kind of split everybody apart, and it caused, the big Texas out of the Bay Area. And now, there's kind of more options. There's significantly more entrepreneurs in New York and Miami and Austin. And so there's kind of all of these different options, a menu, if you will, of cities that people can choose from. And so I think they're all unique and have their own issues in their own way, right? And so I've tried all of the cities that I just mentioned. I've spent time across, and I think they're all very unique in their own way. I think that New York very clearly is a hustle and bustle city. But the big part of moving to New York City is you enter into this kind of implicit social contract where you move into your tiny little box in Manhattan and you are living there, paying really expensive rent. You don't have very much space, but there's a bunch of people, there's a bunch to do, and there's plenty of like restaurants and events and parties and lots of socializing that can go on. And so the part where New York got ruined is that throughout the pandemic, all of that upside kind of went away, but the downside stayed. It's still very expensive, more expensive now than even, at the start of the pandemic or last year. And the spaces have not gotten any bigger. Everybody in New York still lives in a tiny box, no matter how rich you are. And, some of the events and socializing and kind of, overall things that made New York are coming back. But I think that anybody who lived here before the pandemic would tell you that it's not 100% still. And so the value of New York has gone down while the prices have gone up. The amount of space that you have stayed the same. And so I think it's just become less of a reasonable bet for people to make, which is why they're now, opting into the alternatives, which are places like Austin and Miami. Now, I tried Miami as well. And
We met in Austin.
yeah, we met in Austin.
Yeah.
And I think that those are two different alternative flavors, right? I think that there is an entrepreneurial community kind of growing in Miami, but I think that the heart of the issue is that it's really difficult to hire engineers there. I think that, if you meet engineering archetypes, and just anecdotally speaking, there aren't that many people who are interested in software engineering or work as software engineers in South Florida. That is just not the place where they live pretty straightforwardly. And it's not a place that they would want to live either. And so I think it's a great place for the kind of crowd that I've seen forming there, which is semi-retired, already successful investors who are kind of, promoting the high quality of life and the fact that you have a ton of space and it's sunny all the time and it's warm. But those aren't actually things that matter for building really big and interesting businesses, right? And then Austin also has a growing kind of entrepreneurial community. We have investors who live in Austin. We tried building our company out of Austin as well. I've hired people there. But the kind of overall thing is that Austin to me didn't feel like a real city. It felt like if I removed the skyline from downtown Austin and I got rid of the Google building and I got rid of some of the, large apartment complexes, it would feel like a small town in between Houston and Dallas. It does not feel like one of the mega cities like New York City or London or Tokyo or any of these other kind of metropolises that feel like they're at the center of the world and they're, in the middle of an empire. It feels like a small Texas town. And so, I think that's a good place for establishing some, initial roots and, growing your initial project, but it doesn't really feel like a place where you can really scale and build something big and where people are very ambitious. And I think that that's kind of the heart of what's missing. So I think that what's most promising about Praxis is having a place where you have a really great community. That's number one, where you kind of fix the Miami problem of not having enough, smart, interesting, hardworking people. You have a more coordinated center orienting around community and events that promotes this good social life and way of living within the city. And then lastly, a beautiful place where you have, plenty of space and limited pollution and don't have to be worried about this negative environment that you see in places like New York City, where you go outside and it can be really depressing sometimes to see how much the infrastructure has degraded and how little people actually take care of this place. And so I think it's very important to me to be able to be in places with people I care about who are really smart, that are very beautiful and pleasant places to live. And I think that's what I'm most excited about with Praxis.
Yeah. I think one of the core messages that Praxis is offering is that, to your point around kind of a desire for a nexus, is that golden ages are never disembodied, right? They're embodied in a physical city, whether it's Athens, whether it's Edinburgh, whether it's London, or at times New York. And I do think that really talented people want to be with other talented people. They want like the serendipity and the kinetic energy that happens of rubbing shoulders and sitting across dinner tables with people that are dreaming dreams as big as theirs, working on interesting, complicated problems in the same way that they are. And one of the things that kind of remote work or the metaverse or even some elements of Web3 really gets wrong is this idea that, well, I can just go and move to Boise and join a couple of DAOs and take part in this golden age. But the truth is that the people that are most interesting, in my opinion, most high variance and most generative, they want to be sitting at dinner tables with those people. Let's zoom out a little bit. You're a great student of history. Anyone who's been to Miguel's house can look at the art on the wall and determine that pretty easily. We're in a very turbulent period. Where does Praxis play in this turbulent time? What purpose and what mission can Praxis have in a turbulent time? But I'd also just like to even know like the most macro level of like how you look at our current time and what that portends for the future.
I think it's really clear that we're going through a period of societal upheaval and crisis right now. A lot of the institutions and ways of living that we've grown accustomed to over the past couple of decades are not going to stay around, or they're going to look very different. I think that crypto is going to be a really big part of this ongoing transformation from, the older kind of more boomer institutions to newer institutions and refoundings that were created. And new cities are going to be a part of that as well. I think that there are going to remain many established places, like, say, for example, New York. But I think that also we are going to find ways to be able to create new areas where we can generate communities and have really wonderful places to live. A lot of people think that it makes sense in this sort of crisis situation to not commit themselves and to keep their options open, go from job to job, not invest too much into anything or anyone. But I actually think that that's a trap. You need to make commitments. You need to devote yourself to lasting projects. You need to build trust and loyalty with people. You need to develop convictions. And these are all sources of strength. Meeting people in person is a source of strength. And I think that's something that Praxis understands. I was looking at a tweet from Paul Graham a couple of days ago where he basically mentioned that if you had Zoom and everything was remote first, and then somebody invented meeting people in person, it would seem like a massive upgrade. I completely agree with that. And I think that is going to continue, and that's going to continue to win as well. And it'll be very clear that the companies that are in-person first and the communities that are in-person first versus remote are going to win bigger than the ones who aren't. And so I think in general, all of the things that I just mentioned, they give you a foundation that can withstand storms and that might rage around the world. That doesn't mean you can't be agile or you can't be mobile or, you can't go to exotic places and, be by yourself for a little bit. But without these things, you're just kind of, a leaf in a storm. So, that's how I think about Praxis. That's how, I'm building things at Arkham. We're building something with a strong foundation that's going to endure and is going to thrive through, the coming upheaval and allow existing and future institutions to better navigate the volatile world of crypto. And I think that Praxis is building a city that will help people navigate and get through the upcoming societal upheaval and be able to continue to live very prosperous, very healthy lives.
I think that that's like an incredibly salient point. I certainly see people opting for, just look at family formation or look at the great resignation that just happened in November and has continued to happen where people are just leaving jobs and trying to bump around. A lot of that's leading to like wage inflation and other things. But more importantly, this concept of like the psychology of being untethered seems to be almost being propped up as something good. I just got engaged. You could think of like, being engaged to somebody for, and marrying them for life. What it gives you is stability more than anything, and the ability to commit, like at a time in great transition. One of the best things that you can basically do to anchor yourself, to allow you to participate in that great transition, is to be like just deeply anchored in some of the most foundational parts of what it means to be human. And I don't know how we shift the narrative for the young in society such that we actually hold up these pillars of stability and say to them, if you can establish this, you can do anything. It's not if you're untethered, you can go anywhere and accomplish anything because like you can participate in 5 projects at once. You can meet 10 people a week on Tinder. It's this concept of commitment that I think will be absolutely critical to seeing humanity through this period of upheaval. And I just like can't echo enough and prop up enough people like on this podcast to make this statement that you must commit yourself to things deeply and find stability in your life, because the transition will be so great, so transformational, that if you aren't, you will be a leaf caught in the wind.
I think that's right. I think in general right now there is a plague of people sort of wanting to keep their options open across everything in their life. They want to keep that sense of freedom. They want to keep that sense of not being tied down to anything. They want to keep the sense that they have plenty of options and never need to commit to anything. And I think that that's really dangerous and it's really unhealthy. Nothing great can be built by jumping around and not committing to anything. I think it would be much more effective and much more useful for most people to actually, just commit and tie themselves down to something than to, just keep going around and working on projects for 6 months or, going on an insane dating spree versus, being able to actually commit themselves to something and try to build something great. I think that, oftentimes people can't even get themselves past, what I consider to be like the idea stage or the seed stage for a variety of different things. But the reality is that a lot of the most fruitful parts of a business and a lot of the most fruitful parts of these different experiences and knowledge actually comes from going way more in depth, not just exploring, the surface level of a project or of a given topic. You actually end up learning and making way more gains much deeper into your experience. And I think it's the same thing with startups. I think that many people can't commit themselves to any particular idea. They're really afraid that they're going to pick the wrong thing to do. And they don't realize that, a lot of the startup doesn't actually happen at the very beginning. It happens, as you build it. It's a really kind of long-term process where your business is not successful on day one just because you thought about the idea, right? I mean, you start with the idea and then over time you learn and you make mistakes and, you hire people, you fundraise, you talk to customers, and you go about operating your business. And through those experiences, you learn how to become a better entrepreneur and build a better business. And I think that many things globally in our reality are like that as well. And so there's a bit of a plague right now where because people cannot commit themselves to anything, they're not learning very much at all. And they're not becoming more effective and better people.
It's just like the classic kind of statement of it's more about the journey than the destination. And a lot of people are just cutting their journeys. They're just having multiple journeys that don't really develop over time. But to your point, just to take that metaphor and pull it forward to its conclusion, it's actually in the later stages of your journey, after you've fought a couple of monsters, it's like the solidarity and like the asabiya that we talk about, this shared group of feeling between your team, between your partner, and between your friends and your compatriots. It's so much more powerful on day 600 than it was on day one. And all the lessons that like bear the most fruit really actually come at the later stages of this. I come from a place of like, I just want people to learn those lessons and have those experiences, because the early experiences, the early lessons, the low-hanging fruit are actually not nearly as fulfilling as the later stages. I ask everyone the same last question, which is I try to get them to envision that we're sitting in Miguel's villa in Praxis in 2035. We're looking out on this city that we helped create together. We've created that nexus for human excellence in a golden age. What are you hoping that you yourself have learned as partaking in that experience? And even more broadly, like, what do you think that we will have all learned?
I think the most important thing that we could have learned during that time is how to find meaning and how to revitalize ourselves and our society and our community. I find that a lot of people, especially younger people right now, are very lost, and they don't really know, what to do. They don't really know how to do it, and they're very scared to go about and, do things in the world. And it causes them a lot of pain, and it causes them a lot of anxiety and distress. And they kind of fall into more nihilistic Nietzschean thought patterns, which make it very difficult to actually do things in the world. And so I think in the case where we are, looking out on to Praxis and have built something really beautiful, I wish that we will have figured out how to give people way more meaning and revitalize our societies and revitalize our communities and actually build healthy kind of psychological connections and psychological bonds that shows people what it really means to be human and live a very fulfilling life.
I'm going to push you to answer a question for yourself as well, simply because I think you're somebody who already today has a lot of these foundational elements. And so to know what it looks like to even take that a step further, I'd wonder what you'd say.
The thing I care the most about and would be excited to have learned during that time period is how to be the most virtuous version of myself and figuring out exactly what it means to be virtuous and what it looks like to be virtuous and act as a virtuous person. And hopefully by that time, I will have figured out the answer to those questions and would be enacting them.
Miguel, thank you so much for the conversation and hopping on the podcast. I certainly hope to have you back on, and I'll see you in the city.
Thanks a lot, Eric. Looking forward to it.